Hello and welcome to the market update for Tuesday, September the 7th. I almost forgot that I had a market update today. I always get thrown with when we have those holidays on Mondays. But luckily I remembered and we have a class today. So let's begin with taking a look at the overall market. A little bit of a mixed market today. The NASDAQ is up, but everything else is down. Well, the S&P is basically flat. But we are off the lows of the day on those indexes that are down. The market, and I've been talking about this the last couple updates, that the market still looks like it wants to go higher, but in the very near term, it's hard to know how that's going to play out. We've had some bearish, near-term bearish looks to the market late last week. And like I said, even though the market opened a little bit lower today, it's been kind of coming off the lows. It's not acting like it really wants to go down. There seems to be a lot of people buying the dip. I still think we need to kind of push into that extreme overbought condition before we really have to worry about a significant correction. So, and what am I talking about when I say that? Well, if you look at the direction alerts here, if we come down, momentum has backed off a little bit. It was in that extreme range. It's kind of moved back into the buy range here. I'm looking for momentum to get not only in the extreme range, but closer to the far right side of the extreme range before we have to really worry about a larger correction. And again, nothing can tell you exactly when corrections are going to take place. We are overbought enough to where if there is unexpected bad news that comes out, it could trigger a larger correction. So you always have to worry about that. We are in a condition right now where a larger correction could take place. But you can't just assume unknown bad news is going to come out of nowhere. So, as far as what we can see right now, we're not quite at that stretch level where you really have to be concerned. What I mean by that is when you're really at the stretch level and your indicators are all the way in the extreme range right here, it doesn't take very bad news to trigger the bigger correction. It could be something that just seems like it's not that big of a deal, but the market at that point is looking for a reason to sell, and any reason will do. It just needs an excuse to hit that sell button. So that's kind of what I'm looking for, is us to get into that more of an extreme range there. The breadth indicator has been improving. We are still in the trending range here. Now this one, I don't know if it'll get to the far side of the extreme range. I'm looking for anything in the extreme range because it's been lagging so much. And breadth tends to lag a little bit at the market tops. What that means when we talk about market breadth, we're talking about the number of stocks that are participating. What tends to happen at the end of a trend is that fewer stocks are pushing the market higher. A lot of times it starts to get consolidated into larger companies like and we're starting to see it right now. The larger cap tech stocks, Netflix and Facebook, Amazon, Google, Apple, if they start to kind of be the reason why the market's going higher, that can be a little bit of a signal that you're reaching that market top. Now they've been lagging; those stocks have been lagging for several months, and now we're starting to see them kind of take off a little bit. And so that again, if we start to push into that extreme range, and those stocks are the kind of the leadership or the ones that are leading the way, and the rest of the stocks aren't really participating, we're not getting the full breadth there. That could be a little bit of a signal that reaching a kind of an end there. And then sentiment is already high, but again, we'd want to see it get into that extreme range as well. And we're elevated right now, but we're not in the extreme range. When we look at buy-sell ratios, we talked about the fact that we are getting a little wide here, but it's not extreme. We've been wider in different spots. So I don't see anything there that would indicate that we're extremely overbought. We are seeing that the buys are outpacing the sells. That's a good sign. The buy-sell ratios of the entire market are still they're at about 2.5 to 1. That's a good sign for continuing to buy in the portfolio. If that dips down below 1, we get a little bit concerned there. We don't want to add to the portfolio at that point. Sentiment is backed off a little bit from that extreme range. That, again, I mentioned this last update that might be a little bit of a reason why we're getting a little bit of a sell-off in the last few days. Is that sentiment was pretty high. It reached that extreme range, although it can't exceed that. And I would anticipate that if the market starts taking off again and those other indicators are going to push to those extreme levels, that we'd see the sentiment indicator get up into these higher levels here. And that would be a pretty clear signal that a pullback is imminent. Let's take a look at the individual charts. There's the S&P 500. You can see that that we're off the lows of the day. Still following this trend channel right here. Now, again, this can be another reason why it's not surprising we pull back a little bit over the last couple of days, because you can see that we reached this is not going to be a perfectly straight line, but you can see that it's followed that trend line. Every time we've gotten up in that area, it's pulled back a little bit, or it's moved sideways a little bit, or it pulled back. Looks like this is a little bit more of a sideways move. Again, if we can push out above that, that's another signal there that we're kind of probably going to be entering that final stage of reaching those extreme levels. So where some people might look at the breaking out above here as being a breakout for a huge move higher, I'd be looking at that as kind of that final stage of the rally, setting up for a larger pullback. So I'd be a little bit more of a contrarian in that, just because of the context of everything and how far we've run already. I would be a little bit suspicious that a breakout there would be kind of a false breakout. And remember that what sets off the top as well is that everyone gets overly bullish. And so if there's a bunch of people out there that see a breakout and they say, "Oh, this is a new reason to buy," this means this market's never going to go down. That's what kind of leads to that extreme emotion that turns to panic when it reverses and things start selling off. So that's something to kind of keep an eye on. We'll keep an eye on that over the next few updates here. But you also see the support line has been pretty solid too. So it's been a very well-defined channel over the last several months. And so if we do get a breakout and then starts to sell off again, what would differentiate a sell-off from these ones back here that ended up getting bought? Well, if we break below that channel, that would really confirm that this is that we're in a larger sell-off and that there's a little bit further we could drop. But those are down the line. I'm just trying to point that out, that if we do start selling off, this is going to be a trend line that I'm going to keep an eye on to see if it gets broken to the downside, because that would be very bearish if it were to do that. The Dow chart, Dow's been down a little bit more today than the other indexes, down about 0.5%. But the overall chart, you're still kind of in the sideways range. We're off the lows of the day, and where we're at right now is right at kind of the support of the sideways range. Again, it still looks like we'll recover from this and move higher, at least as of now. But as I like to do in a lot of these charts, this move down right here is going to be key. A breakout above here would be bullish. A breakdown below here would be bearish. And we're kind of right in the middle right now. So those are kind of the key points to keep an eye on, key areas to keep an eye on. to kind of confirm a trend direction. So what's the trend direction on the Dow? Near term, sideways. Longer term, we haven't broken the higher highs, higher lows yet. So again, we're assuming that uptrend is still intact until we see different. NASDAQ, like I said, new all-time high today. And again, what's the leadership of the NASDAQ 100? Well, Netflix, Facebook, Amazon, those FANG stocks, Google. We're seeing it. They're driving things higher right now, and that index keeps hitting new all-time highs. It is in the extreme range, but early in the extreme range. It's been it got a little bit further into that range. We were closer to the right side of that range, right in here, and then we moved sideways last week, and it brought us back a little bit. I would anticipate that if this continues to move higher here, that we're going to work our way back over to that extreme side again. But again, the trend is still considered up. I'm not seeing any major reversal signals that are telling us that it's going to drop anytime soon. So we have to kind of assume that that trend's going to continue. As trend traders, we're not trying to predict, but we're also making sure we keep an eye on those clues and understanding the context of where we're at. We do seem to be in the later stages of this trend, and so we do need to start paying attention to potential trend reversal signals. Russell 2000, this is going to be a key one to watch as well. It's down a little bit today. Had a pretty good run over the last month though, and it's still low off its all-time highs. We'll go back to a one-year chart here. You can see that we haven't reached all-time highs in the Russell since last March. Now, what I've talked about several times in these updates is it's possible that when we reach those extreme overbought conditions in the market, that the Russell does end up breaking out. Although I would expect it to be a very short-lived breakout and then start to reverse. But it could also be that we don't quite break out. Remember, the Russell tends to be that leading indicator of the market. The small caps, and the fact that they've been lagging for so long is a pretty bearish signal. If the other indexes reach new all-time highs, but the Russell doesn't, and it starts to peel off and sell off, that could be one of those triggers we look for, or those early bearish reversal signals that we see as it starts to peel off first. It should start to lead the way down. But I don't think we're there yet, but that's another thing that we'll be keeping a close eye on. And that can sound repetitive in these updates. Sometimes you'll hear it sounds like I'm saying the same thing. But remember, the markets just don't move quickly, and sometimes we see a buildup to these reversals. We start to see these little clues. And what I'm trying to teach you is some of the things I'm thinking in my head and seeing in my analysis, so that you can learn how to recognize those same things. And none of the stuff seems to give you an exact day of when that reversal is going to take place, but it can help you kind of manage your portfolio and manage your trades based on what you're observing. And so I may talk about some of these things from week to week, but hopefully if you're viewing these each week, hopefully you see the outcome that the markets do very often end up playing out the way the analysis says they should. Now, they don't always have to, but everything I do is based on probabilities. And so, I don't have any sort of exactness in my mind that the market has to do what I think it's going to do, or what the signals are suggesting it should do. But again, those probabilities are all you need to manage your portfolio and avoid some major disasters and to take advantage of great opportunities. If we can get out of our trades, majority of our trades before a big sell-off, just think of the advantage that is when we bottom out. You know, you have all your money ready to go and put back in when the market comes down, and that's a huge advantage over people that buy too heavily at the top and then get wiped out when the sell-off takes place. All right, so that's what we'll be watching for the Russell. Bonds, we've kind of moved down a little bit lately. We've been watching this area right here. Breakout above there would be bullish. Breakdown below here would be bearish. Overall, this whole movement looks more choppy, more sideways compared to this move. So I'm still looking at this as a correction for a move higher. But in the near term, you know, it could still dip down a little bit further and still be considered a corrective range there. But these are going to be the key areas. A breakdown below there would be bearish. Break above here would be bullish. You know, notice that we've had some lower highs right through here as part of that correction. But we did have a higher low right there, but then we had a lower low as it went back down again. So a breakout above here would give you a higher high that would confirm that you could be breaking out of that correction and starting to move higher at that point. We haven't been able to do that yet, so but that's what we're kind of keeping an eye on. But as of right now, we're in kind of a sideways corrective phase, and waiting for it to kind of take off in that impulsive move again at some point. Gold, kind of the same thing. We've been waiting for it to break out above here. It looked like it was real close to doing that. Actually, it did have kind of an intraday high, I think, that kind of broke out a little bit last Friday. Then it's kind of reversed today and come back down. I'm looking at the kind of the larger context. Those of you that are kind of new to the update, we look at like a 2-year chart. I'm looking at this larger trend up, and I'm looking at this as a larger correction of that this is kind of starting that next move higher, and this is kind of an ABC correction of that. Now that could change. It could definitely change if we take out that low. So even with this move down, I'm looking at that as still just kind of being a corrective move of starting of the uptrend. What are going to be the key points here on this one? Obviously, any breakout above this high right here is going to be bullish. There is a little bit of a pullback right here that put in a higher low. You know, you have these smaller little stair steps through here. Yeah, I still would say, you know, obviously the obvious one would be this low would be bearish if it comes down here. But I would probably bring in this low right here just from a retracement standpoint. If this was a move higher, this thing could pull back. You remember, stocks tend to retrace about 50% of their moves. They can retrace a little bit more than that 618 retracement, that Fibonacci level. So they tend to retrace about half the move. So if you have this move right here, when it pulls back, it tends to retrace about half of it. And so this would be a little bit more than half, but there's a support level over here. So that's when that'd be probably pretty close to that 618 retracement level. So we can keep an eye on that. If we dip down below there, it makes it much more likely it's going to reach this low down here. And that would be bearish for gold. But we'll probably have a better idea. I'll have to see if I remember this on Thursday if we want to take a look at it. When you have that one-day pullback like this, it's hard to tell if this is the start of a bigger move down or if it's just a one-day pullback or whatever. So we'll probably have a little bit better idea by Thursday if this is, you know, just a quick little pullback for a move higher, or if it's getting a little bit deeper into that range there. So I'm a little bit indecisive on gold right now as to to where I think it's headed. Longer term, though, I still think it's ultimately going higher, but again, that could change depending on how that chart plays out. Oil, kind of similar. We've been looking at this being a corrective move from this larger uptrend. This looks like an impulsive move up right here. So we had impulsive down, impulsive up. We're getting a little bit of a chop back and forth through here. So this still right now looks like just a corrective phase for a move higher. This is impulsive. This is more back and forth, more corrective looking. Again, this is another one that would probably have a little bit more clarity on Thursday, or even by next week. We'd have a little bit better idea on that. All right, the dollar has been in a downtrend, and again, this is why this helps kind of explain why gold and oil are down. Remember, they have that one move. They've had a big move down today, oil and gold. Well, the dollar had a big move up today, kind of a bounce up right here. But we were looking at a break below here as being bearish, a break above here being bullish, and we did break below there. We continue to move lower. We're right at a support level right here, so it's not surprising that it bounced right here. But again, I don't know if that's just a quick bounce and we're heading lower again. Obviously, if we break below this low, that's going to confirm the bearish outlook on the dollar, that we expect the dollar to continue to move lower. What would be my bullish? You got a lot of resistance right here. This was the last move down. So that low is going to be important, and this high is going to be important, and especially since that high lines up with a couple other highs, resistance. We break back above here, that'd be very bullish for the dollar. But obviously, we're kind of in no man's land right now. We don't know which direction that's going in ultimately. And with a one-day move, it's hard to know where that's going over the next few days. So we'll kind of just keep an eye on that. The VIX moved up a little bit today, as you would expect, with the S&P being down a little bit. We are at pretty low levels on the VIX. But it's not really telling us anything significant. Remember, when I always tell you about the VIX is it's not going to tell us something every day. You want to pay attention when it's diverging, meaning if the VIX and the S&P are moving the same direction, you want to pay attention, because that could mean some sort of reversal. If the market is up and the VIX is up, that could be a bearish signal that maybe the market is about to sell off. If the market is down and the VIX is down, that could be a signal that the market isn't concerned about or the traders aren't concerned that the market's going much lower. That could be a bullish signal. And then spikes in the VIX. If you get a sell-off and a big spike in the VIX, that can tell you that sell-off that day is a little bit more significant, because it indicates a little bit more of a panic behind the selling when that VIX starts to spike up. But other than that, it should be, the VIX should be down when or should be up when the S&P is down, and should be down when the S&P is up. And so when it's moving that way, it's not really telling us anything significant. We've been added to the update. Keep an eye on semiconductors. We want to compare this to the NASDAQ 100. The chips sector tends to be a leading indicator of that index. We can see that we recently reached new all-time highs on the chip stocks. We've been kind of moving sideways since then. Now, it could be, what I'm a little bit concerned with is that we're in a correction here. So we had this big move up. Maybe this first move down is wave A. This rally back up is wave B. We have a little bit of a bearish reversal candle today. So maybe we drop a little bit lower for wave C. Ultimately, though, I think that would still mean we should move higher. And the fact that we're moving sideways right here, and the previous move was an impulsive move up, would indicate that this still wants to go higher. But in the near term, it worries me that we might have a little bit of a move down for like that wave C of the correction. We'll keep an eye on that. But I don't see anything in the chip sector or chips that's telling me that that we're in danger of a bearish reversal in the Nasdaq 100. And then the Dow transportation stocks, you compare this with the Dow. You can see clearly here we have this clear downtrend right here, and you can see since then we've been kind of moving sideways. Had a higher low right here. We've been waiting to kind of move to a higher high. We've been just moving sideways through this range. We want to keep an eye on that to see if it can break out. The transports tend to be a leading indicator of the Dow industrials. Clearly, though, it's been underperforming. We had this big drop in the transports, and yet the Dow has recently hit a new all-time high. So there's already clearly a bearish divergence there, and so that's pretty significant. And then lastly, Bitcoin. Bitcoin's had a pretty big drop today, and so a lot of the stocks that are tied into Bitcoin have dropped pretty significantly. And that's it for the indexes here. Let's take a look at a couple of stocks, and then we'll manage the portfolio. There's not a whole lot I'm going to do with the portfolio today. There's one stock I'm looking to add, one I'm going to get out of, and one where I'm going to have a stop adjustment on it. But just a couple of stocks to look at today under the sectors here. Computer technology. I'm going to add this KOPN down here. It's a 95 strength rank, but a lot of these higher strength ranks are already in. And again, we don't have to get into these as well. I want to put them in the watch list though, but I always reserve the right to not decide to get in them, even if I do get the buy signal, depending on how the chart looks and the market conditions at the time I'm looking to get in. But KOPN right here, what I like about this, let's put the signals on, and then let's look at a longer term chart. Again, I like that this big run up right here, that's clearly impulsive, and this has been corrected as it's kind of chopped its way back down. It's sitting right at probably that 618 retracement level, which is about as far as you'd want to see this thing pull back. So if this does go lower down here, I don't want anything to do with it. But you can see in the near term right here, it looks like it's forming an inverse head and shoulders pattern right at that key retracement level. If that's the case, and this can go back to a buy signal, there's a way to manage this where you have very little risk, and if it works this way, eventually back up to this high, you have tremendous reward for a small risk. So I'm always looking for that, and we've got some real subtle. Go 6-month chart, you can see. You have lower high, lower low, lower high, lower low, impulsive down, impulsive up that went to a higher high, and then this looks corrected right here. And then, like I said, that looks like an inverse head and shoulders pattern as well. I'll wait till this goes back to a buy signal and we're probably getting pretty close to that. A little bit more of a move higher to get to that. But I'm going to go ahead and put this one in the watch list so I can reevaluate it if it does go back to a buy signal and see if it looks like it's kind of turning that corner. So to put it in the watch list, we're going to click on this little green button right here, this little plus button. And I want to put it in the stock specific class watch list. Let's save and go to the watch list so we can put the alert on it. So here it is down here. And then I'm going to click on this little box, and what that'll allow you to do, for those of you that are new, it allows me to get an email alert when that signal goes from hold to buy. So I don't have to necessarily watch it all day long. Let's click save, and that'll send me that email. All right, another one would be in the retail sector here under holds. This TGLS, Technoglass Incorporated, 94 strength rank. So we're down a little bit on the strength ranks there, but as you can see, there's only one that's close to the 98 strength rank, and we're already in that one. We already have that one. So I don't like to go down below 90. But what happens when you're in the later stages of the market trend, bullish trends, like we are, most of these stocks are already have buys, so there's not going to be very many holds that are going to buy. So sometimes if you don't want to chase the stocks that are already, already in their impulsive moves or already have their buy signals, sometimes you have to move down a little bit on the strength rank here. But not too far. We don't want to go down, and usually I don't even usually like to go down below 95 if I can avoid it. But it depends. It depends on how the chart looks. But Technoglass here, and so we had this little move up. Here's the impulsive move. Here's the corrective move, more choppy. It broke out right here to a new high. And then it's kind of been moving a little bit more sideways through here. Now this could be wave A, wave B, wave C. It come down a little bit further. Sorry about my voice today. It's in spring and in fall I get the allergies, and not to mention that Utah has inherited all the smoky air from California, Oregon, and Washington. We I think they said the other day that we had there was one day, actually last month, that we had the worst, the numbers they're reading from the air quality, we had like the worst air quality in the world, or near the worst in the world. And that's including like some of the air quality in India and China. So that's pretty bad. So if you view Utah as having crisp, clean air, that's not the case when there's wildfires in the West. We get all their smoky air, so that's probably part of the reason why it's affecting my voice as well. Anyway, I digress. So that looks like it's in kind of corrective phase right here. It may not be, but it's pulled back a little bit the last couple of days, and so I'm waiting for it to go back to a buy signal. This is another one of those that I'll reevaluate it if it goes back to a buy signal. I'll see how it looks and make that decision whether to get in or not. But let's go ahead and add this to the watch list. And put in our alert. And then one last one under construction. We already have HOV that we're in this trade right here. I'm going to add this BXC. It's a 90 strength rank, but a lot of these, and this is another thing with strength ranks, is some of the sectors that you're looking at, they may have lower strength ranks in general. And so construction is one of those that if you're anywhere in the 90s, that's actually good. That's a really good sign. You're not going to get very many. If you're waiting for a 98 strength rank, very rarely you're going to get a 98 strength rank in this sector in the hold range. So you'll learn that as you're doing this on a daily basis. You'll kind of get a feel for which sectors are like that. But let's take a look at DXC here. I can see that at a recent high up here, it pulled back, had a deeper pullback here. Let's take a look at the longer term chart here. to get a little bit of idea of context. So you can see a nice large trend up here, big correction right through here, and it's come back. And so you're assuming that larger correction is done. We should go back to new highs right here. That's what I'm expecting. The way this trend is acting, that's what I would expect it to eventually take out that previous high. In the near term, you had this move up right here, and then a quick pullback, moved higher here. So you had a higher high, pull back right here, higher low. There's a higher low right there, higher high, higher low, higher high. And you're expecting this to put in a higher low. Now it's a pretty deep pullback right here. So if here it broke out, moved higher. This is a pretty deep pullback, and it's down a little bit today. It really needs to turn around here pretty soon. Technically, it could come down and put in kind of a double bottom and go higher. But this is one of those, again, we're just going to put it in the watch list in case it does come back to a buy signal and holds. We end up having a higher low. It continues to act like an uptrend. It may not. And if it doesn't, we won't get that buy signal. We'll just boot it out of the watch list. It won't do us any harm. But I'll just put it in there to keep an eye on it to see if it gives us an opportunity. All right, put the alert on that one. Okay. Let's move on to the portfolio. And we backed up. We were up around over 2,000 with the pullback. Recently we're down now to 1,100 up so far, which is not bad for starting this a little over a month ago. But hopefully, those of you who've been following each week, you just see that that's part of the fluctuation. You know, you're going to get that back and forth. You could drive yourself nuts. You know, if you take a guy like Bill Gates or Warren Buffett. The market's up for the day. Anytime the market's up for the day, their net worth goes up several $billion. You know, they could be up another $20 billion. You have a massive sell-off, and you're like, well, Bill Gates just lost $50 billion today or something like that. Maybe not that much, but that'd be quite a hit for him. But you know, he lost $5 billion or $15 billion. Well, that's just how things are going to go. It's going to fluctuate, and they're not jumping off a cliff because they lost $15 billion, because they know that that's just part of the process. It's just going to go back and forth. But you know, there was a few years ago that Bill Gates only had $50 billion. He was still one of the richest men in the world, and now it's like he's got like 150 billion or something like that. So they're looking at the long-term process of growing their net worth. And that's what we need to do as well. Just be patient and let the trends move. As far as stop adjustments, let's go through these in the portfolio here, and I'll stop where I'm going to make a stop adjustment. There's only one I'm going to make today. Let's put in my portfolio and stock specific class here. All right, on PFMT, our stop is right below here. I'm not going to do anything to this. This looks like it's getting ready to break out. I still want it to break out, and so I don't want to get up there too close. RN, our stop's down below here. Same thing. We're close to breaking out. It's pulled back a little bit, but nothing to panic in. It's been down the last couple of days, but it has a little bit of a bullish reversal candle today. We'll see if that leads to a move higher. MSTR has a big down day today, and we're right. Here's our stop right here. So this might be one that I get stopped out of tomorrow. Remember, I want to see a closing price at our stop level, at or below our stop level. So I'll probably be watching this tomorrow to see if it rebounds off of this move down today. Overall, though, it still looks like that should hold. I mean, we had this impulsive move up, and this was looking corrective. It looked like it should go higher. We'll see if this is just a one-day thing, and we can reverse that. We haven't gone to a lower low, and that's why we have our stop right below here. If we do get stopped out, that'll be a good thing because this thing is probably heading much lower at that point. But that one's real close. Now, Mara, I'm going to go ahead and get out of this one. Now, remember, we talked about this one. I talked about this in the last update. Our stop is, I think it's might even be right in here. I think I put it right in here. But remember, and I know there was, I think it was Thursday. I think it was last Thursday. I had the trouble with the update. Had trouble starting the class, and then when I did start it, my computer decided to reboot in the middle of it, and I lost it. I did end up doing a recording of that class. If you didn't view it, go to YouTube, the YouTube channel. Go to YouTube, type in TradersPro, and you could view that. But one of the techniques I taught was that when you get in the extreme reversal risk, and this was in that extreme reversal risk, it's backed off today because of that sell-off today, but it was in the extreme reversal risk area. One of the techniques you can use is you can, as a tighter stop, is you can wait for a close below the low of the previous day. Not a move below the low of the previous day, a close below the low of the previous day. Now, during this final stage right here, we haven't closed below the low of the previous day, but we will today. Now, it's very important. I don't like to use this just randomly. I like to use it when it gets into that extreme reversal risk, because when it gets in the extreme reversal risk area, that means you're probably in the later stages of the trend. So any sort of a signal that trend is reversing it might be good enough to just go ahead and get out. And that may be just a bearish reversal candle that you decide to get out on. Now, again, for those that don't know how to read price action or read your charts yet, you might want to develop that skill before you start making these types of decisions. But it's a way that you can keep more of the gains that you've made. In other words, I don't need to necessarily wait for it to get down below here, because this is a pretty good signal that this is going into a little bit deeper pullback. Now, it may just be something like this. It may come back down to this area right here and then go back up again. But this is another thing, is that just because I get out right here and I'm going to lock in those gains doesn't mean that I can't get back in it again. If this goes into a corrective phase and pulls back and looks like it's still within this larger uptrend right here, I can always jump back in this thing again. So I'm going to go ahead and take profits off of that. In fact, let's do that right now. Let's go ahead and get out of this. So on Mara, we got in at $30.95. We're currently at $39. So we have about a $10 or a $9, a little over $9 or a little less than $9 profit there. Let's go ahead and click sell. Now let's see here. Actually, let me pull it up right here. I want to make sure I get the price right of where it's currently at. Oh, it's currently at 40.63. Sometimes it updates a little bit later in the portfolio there. So I'm gonna put in my sell right here at $40.63. So we do have about a $10 gain on this. So go to my portfolio. Click right here on sell. Now, you have to click right on this right here to pull up the sell box. You just click in this box right here. It's not going to pull it up. I'm just going to ask you how many shares do we want to sell. We have 100 shares, so let's go ahead and sell all 100. But you could decide I'm going to sell 50 of the shares right here on that close below low the previous day, and then I'll sell the other 50 if we do stop out at my stop. You can do something like that as well. There's so many different ways you can manage your trades. Sometimes there's too many ways you can manage your trades. Sell price at 40. See, this is wrong right here. It pulled up this number up, but remember we looked at the current number. It was at $40.63. I could cheat a little bit and use that one. That'd be a bigger profit, but I'm going to take the current value of $40.63. And so we have about a $968 profit getting out of this thing. And let's go ahead and sell it. By the way, I think I did sell one on Friday, or it might have been Thursday, right at the market close, right when I did the update. We go to trading history here. Which one did I got out of another one? Oh yeah, ASPN. Let's look at ASPN here just real quick, because I did the same thing on that one on Friday. It closed below the low of the previous day. It was in that extreme reversal risk. It's backed off. It was in the extreme reversal risk on this day right here. And then Friday, it was actually in the buy range, but it was because it was down. It pulled back and it was going to close below the previous day. So I got out and then it dropped further. And I think the same thing could happen here with Mara, that it could go lower tomorrow. So I'll go ahead and lock in the gains there. All right. Let's continue to go through our list here. SDKS, I'm not going to do anything. Our stop's down below here. This is moving sideways. It looks like it should continue to move up, although the other one we were looking at was doing that, is to have that bigger drop. So, but this one still looks like it's acting like it still wants to go higher. So we're going to just keep the stop where it's at. Tesla, I'm going to go ahead and adjust the stop. We had this little pullback right here, and then it broke out. We are now in the extreme reversal risk, so I do want to tighten that stop up anyway. So we're going to put it right below there. And then this could be one that we do that same thing. If it ends up closing below the low of the previous day, this looks like it could still go a little bit higher. But then which means it could push it even further into that extreme reversal risk. But then if it closes below the low of the previous day, we can go ahead and get out. But for now, I'm going to move it up right here. So let's take a look at what that low was on Friday. The low on Friday was $724.20. So I'll just push that stop up there to $724. Let's go ahead and adjust that in there. Adjust the stop to 724. What that also does is it now, remember we got it at 714. So now well, unless you get a big sell-off that goes way down, we're assuming that if we get stopped out, we'll get stopped out at a profit. We'll get stopped out at a higher price than where we got in. All right, so let's go back to our list here. DDS, I'm not going to adjust the stop. We're right in here. And we have a little bit of a down day, a bearish reversal day today. So I don't want to, there's really nowhere to tighten that up. And this still looks, kind of impulsive up. This looks corrective. It still looks like it should ultimately move higher. So let's let it kind of do that. Hopefully do that. Mosey, I'm not going to adjust the stop on this. It's right below here. We've kind of pulled back last few days, so and it's got a little bit of a bearish candle today. So we're going to kind of just keep an eye on that one. It looks like we possibly turned the corner here on this higher high, higher. Looks like we still have a higher low right now. But if it does come all the way down, our stop's right here. So if it does come all the way down and stop us out, that could be a different pattern that's forming, and we want to be stopped out at that point. CAN, it's been moving sideways the last week and a half. I'm not going to do anything with that one. OPRX. Now again, this is one we're not quite in the, well, we were in the extreme reversal risk Friday. Since we're down a little bit today, we backed back down to the buy range. But this is one that we could use that close below the low of the previous day if we want to. It doesn't look like it's going to close below, remember, it's closed below the low of the previous day. It doesn't look like it's going to do that today. I'll check on this before the market closes, and if for some reason it does, we could stop out. But then tomorrow I'd look at today's low. If it closes below that, I might go ahead and just take profits on that. NTLA, not going to adjust the stop. I think we moved it up to here, tightened it a little bit. And today's a pretty big down day, but it's also right at its breakout area. So I want to see if it can break out, because if it can break out, it could really go. Again, it still looks like it's kind of in this bowl-shaped move right here. So, and you say, well, why don't it's below the low? It could close below the low of the previous day. Well, remember, we want to do that from an overbought state, and we're not in that overbought state, and we weren't on Friday. We were a little bit closer to it, but we weren't in it yet, and we were right at the breakout area. So I'm going to give this one a little bit of room there, especially since the pullback today in the markets doesn't look like it looks like it's kind of temporary, at least so far. HOV, our stop is, I believe, down below here. This one's kind of gone down as soon as we got in it, but it's still, again, it's right at that breakout area. And this goes back to what I talk about when I talk about entry. You can get in at the buy signal, or you can wait for a breakout. I went ahead and got in this at the buy signal, but I've waited for it to break out. Actually, I think this was a breaking out. It was up here, and then I got in it, and by the end of the trading day, it came back down a little bit right below there. But this is in hindsight, obviously, we'd all make the perfect decisions. But when I say that, that's what I'm talking about. Is that you can either get in on the buy signal, or the buy signal is probably going to show up right at the breakout area. You can wait for the buy signal and wait for it to break out to get that extra confirmation. I still think this one's fine, but that's those are the decisions you can sometimes make, and I don't know which one I'll make all the time. Sometimes if the market conditions really look strong, I'd probably just get in on the buy signal, expecting it to break out. If they look a little bit shaky, I might just wait for that little bit extra confirmation. There's no perfect choice, is what I'm trying to say. There's just, like I said, it's all obvious in hindsight what we probably should have done. Waited for a clear breakout. But then again, you might break out and have a huge breakout move, and you missed it because you're getting in up here, and you missed the majority of the move because you waited for that extra confirmation. So there's just no perfect way to do it. Our stop is down here. It still looks like it's kind of forming that inverse head and shoulders pattern. So we're going to let it kind of find its way back up again. WLL, got in this one on this little breakout move. This one was part of the recording I did on Thursday. So if you didn't view that, you didn't see me get into this one. But I got in on that buy signal. We've moved up a little bit, and we're probably getting close to the extreme reversal. Yeah, we're in the extreme reversal risk range here. That might be a real quick trade. Maybe we will need to get out of that one if it closes below the low of the previous day. We'll keep an eye on that. All right, so that goes through our whole list here. Let's move over to our watch list. Now, I did get a signal on a couple of these. This SGOC, I got a signal on, but I didn't like. I didn't like it. Well, I didn't. We barely got a buy signal on Thursday on it. It's a real small buy signal right there. So I decided to wait until. I decided to wait until the next day. Because remember, you'll get the buy signal, and then it's the next day you get the email. I got the email, but it moved down on Friday, and it's down again today. So what I'm going to do is I'm going to reset that email. I'm going to reset it to send me an email when this goes back, because it's gone back to hold. I'm going to set up the alert to tell me when it goes back to buy. I mean, this still looks okay. This still looks like a little corrective pattern right here. We have this big, deep pullback right here. It still looks okay. They can go back to a buy signal soon. So I don't want to boot that out of the list. I don't want to get in it yet. And so I'm gonna reset that alert. Now, another one is a CEIX. And in that update on Thursday, I got the buy signal. I had the opportunity to get in right here, but I wasn't. The market conditions weren't great, and we had a down day right here. It was still a buy signal, but that was a down day, so I decided to wait. Then it broke out, and I decided not to buy the breakout. And look, it's gone higher. I'm not going to chase this. I kind of missed that one. So that was one where I didn't feel like I wanted to buy that breakout, and I wish I would have now. But it's also, though, moved into the extreme. And this is part of the problem with that previous trade. It's already an extreme reversal risk. You know, this could be short-lived, where it comes right back down, pulls right back in, and it may pull back to this breakout area and give us another chance to get in. A lot of times you'll break out, and then you'll pull back to the breakout area. So we may get another chance on this one. And so I might just leave it in the watch list for now, although our watch list is getting pretty big. I'll leave it in for now, but I might have to boot it out just because we don't want our watch list to get too big. But yeah, that was one I didn't jump into. Probably should have. All right, so let's go through our list here. I got to hurry. We're running out of time here. BTBT. Now let's turn the signals on here. Big down day today, but again, it hasn't dropped below this low right here. If it does, I'll boot it out of the list. I'm going to still leave it in to see if it rebounds off of this downward move today. The NTX, I mentioned that this could be forming that C leg of a possible bullish ABC pattern. It's up. We're going to wait for this to go back to a buy. If it goes back to a buy, so I'm going to keep that in the list. KRUS. This is one where I got the buy signal, got the email, but I didn't like the way it traded the next day, so I didn't get in, and good thing it's come all the way down here. Now, it still could be okay if it can rally. Today's a big down day, but if it can rally off of that and put in a higher low, it still looks okay. So I'll leave it in, but I also reset that alert to tell me when it goes back from hold to buy again. And if it does come too much deeper, I might just boot it out, move on. SGOC, I just reset that one. BLNK still looks okay. Wait for it to go back to a buy signal. CEIX, that was the one I wished I would have gone into, but I didn't. BNGO, again, still looks okay. Had this pullback right here. This looks impulsive down, impulsive up, and then corrective. Let's see if it's kind of turning the corner. LXU, this looks like it's the pullback. We'll wait for it to go back to a buy signal. If it can go back to a buy signal, that still looks okay to leave it in the list. NVIS. Now, that's another one. I did get an email on this one, but a little buy signal right there, and then today's down. Let's reset that one too. Well, I'll reset it here in a second. Let's go back. Let's go through our list here. We'll reset the alert. Well, actually, I have to wait. I have to wait till, because it went back to hold today, so it won't. I can't make it. I can't make the alert tell me when it goes from hold to buy until tonight when that resets. Remember, everything updates overnight. But I'll reset that alert. CPRI still looks okay as far as our watch list. Wait for it to go back to a buy. Futu went to a buy today. Now, I won't get that email until tonight, but we could go ahead and get into this one if we want. I'm going to go ahead and add it. We did get out of one today with Mara. I'm going to add this one in. We'll put a stop down here to start with, give it a little bit of room below this August 30th low, which is at $89.81. So I'm going to just put that at, I'll put the stop, I'll put it right at $89.80. 89.80. I'll come back to that to add it. Okay, then these are the ones we added today: COPN, CGLS, and BXC. All right, so if we go back to our watch list here, let's add Futu. And again, I could wait till tomorrow to see how it looks tomorrow, and get the email. But sometimes, if you see it's likely to close the buy signal, and it may not close the buy signal. We got an hour to go, but it looks like it probably will. So I'm going to go ahead and add that to portfolio right here, this blue plus sign right here. And the stock specific class, put the stop in at $89.80. Let's see what 100 shares looks like. That's too high, 2.4% portfolio risk. We want that around 1 to 1.5. So let's just look at 50 shares would be 1.20%. That's fine. That's right in that range. Make sure you're aware of if I get stopped out, I'm looking to lose $1,214. So make sure you're okay with that amount. That amount is too high as far as your risk tolerance. You gotta buy fewer shares. You got to get that down to a level that you can handle if you get stopped out. But that's fine for me. So I'm going to go ahead and purchase and go to my portfolio. We've added that one in. I'm trying to remember what I was going to do with. Oh, I remember MVIS. We're going to reset the alert. See, I'll show you why I can't reset the alert though. If I try to reset it right now, it already has the buy signal, so it's saying, well, do you want me to set an alert when this goes from buy to hold? I could, because it did go to hold, it went back to hold today. So, but I'm going to wait till that resets tonight, and then I'll set that, it'll be at a hold, and then I can set it to go from hold to buy. So I'm going to cancel this right now. I think that's it. All right. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.